Hey everybody, today's Wednesday, the 10th, and the market held on to its gains here. As we noted yesterday, after the market gapped lower down into the week-to-date anchored VWAP, it made sense to be a buyer there. I'd pointed that out on Twitter as well. And I think now at this point, you can raise your stops from up underneath this level to somewhere in this area, depending on your time frame. We're closing in on the all-time highs in the S&P 500 once again, after getting beat back right there at the beginning of the year. 479.98. I think that was the level. Let's go back and take a look here together. If we look at that all-time high, it was 479.98. So we're closing in on that. It seems likely that we will hit that off of this next or this current rally attempt. So don't buy the dip, buy strength after the dip. You're not going to get the low, but you're not going to be subject to all these other false moves as well. Buying right in here was the perfect time, in my opinion, and that's exactly where we bought it yesterday. The NASDAQ, if you're long in here, I think you probably raise your stop up slightly from this level up to maybe underneath today's low. This market has closed that gap and is now looking like it's headed for its all-time high here from late last year. The Russell 2000 is still the laggard and still one that has the most ability, I think, to catch up from here. We're stuck below the year-to-date anchored VWAP. We've got a declining 5-day moving average. Tomorrow, that 5-day moving average will flatten out, even if the market it is in this same range. So it will remain flat there. It will continue lower if we drop down. I don't think that's likely, but it's always a possibility. I think what's more likely is that we start to see some strength in here, and then that the Russell 2000 could be in a position to start to fill in and move up towards those highs as well. So I think if you don't have a position, the Russell is probably the lower risk new entry area because we can control our risk with a worst case stop somewhere under here. Although I'll update in the midday subscriber video tomorrow where I think would be a tighter stop level. The semiconductors, we're not getting much pullback in here as we pointed out in the midday video, and stops can now be raised up underneath this being the most recent relevant higher low with a rising 5-day moving average, and this market is also heading towards its all-time high. The Biotech's taking a little bit of a breather after they broke that pattern of lower highs and lower lows with this move up. I think this is something you want to keep a close eye on. We've had a lot of strength in this market. There's no signs of it slowing down like we saw over here. So we'll just keep an eye on there. I'm not sure I'd be ready to be a buyer. I think I would prefer, a move, a quick move up through this level. What is it doing? There we go. Move up through that level, kind of trap people, then come back down, test the 5-day moving average, the year-to-date VWAP, and then in a couple days, maybe a lower risk setup would emerge in the biotechs. Financials, we've got bank stocks reporting earnings up real soon here, so I would just personally stay away from them. I do anyways, but I just don't see any advantage to being long in there. And the energy names, after they brought in a new group of buyers with a declining 50-day moving average, those people are experiencing losses. This market is at a new low year to date, so they're in a downtrend. They're in their own bear market. Leave them alone. Don't trust rally attempts with a declining 50-day moving average. That's one of my cardinal rules.